quite disappointing when it comes to China's GDP growth projections. At least when you take a look at the CSI 300 index today, it's bucking the trend. It's in the red. We're also seeing commodities in the red pretty much across the board. I mean, how are you reading what you heard from the NPC?
Yeah, look, I mean, the market seems a bit underwhelmed by what came out from the NPC over the weekend. But frankly, at BNY Mellon, what we're telling our clients is to focus on, it's not that the rebound in China is inevitable. It's not the inevitability of the upturn that we are focused on, it's the sustainability of the upturn. And from a sustainability perspective, I think the announcements from Li Keqiang ticks all the right boxes. I think it's important to look at where you're coming from a growth perspective. They've struggled to meet the growth targets in the last few years, especially the miss last year was unprecedented. Yes, the growth target was done away with in 2020 because of the shock from COVID. That was a one-off event. But in 2022, missing it by such a large margin is significant. So you don't want to set yourself up for another target, which is where you struggle to meet it or you pile up even more leverage. Where are you going from here? That's where you look at, China's growth numbers won't remain in a 5% handle indefinitely. It's going to come down to a 4% handle at some point in 2024 or 2025.
So is this a buying opportunity then? I mean, the CSI has given up its gain since its reopening.
Yeah, so it's realistic, it's pragmatic, and it's a bridge to the future. So it ticks the box from a sustainability standpoint, and if the markets are not excited about it, I think the upturn is still inevitable. It's nothing. This is not going to stop the upturn. I think you can question the scale of the stimulus and so on. And I think it gives them more policy space to do more, as some of your observers, were also pointing out. So we do think that this is a very constructive backdrop, actually. Yeah. Go ahead.
Aninda, we talked to Andrew Collier a bit a short time ago. He was suggesting that they needed to do more in terms of invest toward consumption and not the old kind of playbook that they've been using. And that's something that he found missing. What's your take?
Yeah, look, I think the Chinese have never tried to put money in the pockets of the consumer. I mean, they've always been focused more on helping out specific sectors or industries which have gotten in trouble and so on. I think that approach is still seems to be intact, but it certainly would help if there were more tax cuts in favor of consumers and so on, or more spending power being directed towards the consumer. Will it come about? I don't know the answer to that question, but I think if they started to struggle or the re-impulse starts to fade after 1 or 2 quarters, that's where they have the policy space to do more. I think that's quite clear from the degree of the stimulus they're planning over the next in the coming year.
Themes such as dual circulation, common prosperity, they weren't highlighted as much as they have been in the past, but certainly they're there. But what do you make of actually the appointments that they've been putting in at the meeting? Because they are, you could argue, coalescing. There's a more coalescing of power for the president.
Yeah, there's no doubt about that. I think this was Li Keqiang's farewell gift, frankly, to China and to the rest of the world. It sets a modest target, but it's also pragmatic and realistic, and it creates more space for the authorities to do more. Yeah, I think the appointments, which we haven't seen fully play out yet, will probably be stacked in favor of Xi Jinping, and that's not extraordinary. I think the whole market's expecting that, but I think there's the potential to do more is certainly on the table, and that I think will get more interesting depending on how the reopening impulse plays out. Will it fade in the next few months or quarters? I think there's been a lot of talk about the drawdown of excess savings and stuff like that, which I think also needs to play out before you start to put more chips on the table in terms of policy playing a bigger role for supporting growth.